It was a mistake for China to retaliate. The president, when America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight.
The global trade war is getting worse. Today, we have to talk about the biggest bull trap of 2025, and what just happened with the S&P 500 was absolutely textbook bear market, and I'll tell you exactly why. So, Trump sweeping new tariffs in effect, including 104% on goods from China. So let's fast forward to this morning. Let's see what happens. China slaps 84% retaliatory tariffs on U.S. goods in response to Trump. I hope I don't get copyright strike for that sound effect because it's very funny. So let's get right into it. Let's see what happened here. At around 10:30 Eastern, the S&P 500 was rallying hard, as you can see in this chart right here. Everything was green. Everything looked great. I was even tweeting memes of me waking up this morning after buying the dip. Look at this dude's face. But by 3:15 p.m., that entire move was erased, as you can see here. We went from plus 4.5% to minus 2%. This is a 6.5 percentage point swing in just under 5 hours. That's nearly $2.5 trillion wiped out in market cap. And let me see, I got a new sound effect for you guys.
Somewhere between 700 billion and $1,300,000,000,000.
Okay, it's too long. I won't do that one again. But let's examine it. So this is the definition of a bull trap. So we had the S&P 500 up nearly 4.5%, and then Fox reports the 104% China tariffs are in effect right here. So White House says iPhone can be made in China. I'll talk about this later in the video. And then you can see the S&P 500 just plummeting, you guys. So it did start green. I was tweeting memes, but look at this big swing. So this is a $7 trillion swing based on news. I've been talking about this in a lot of my videos, you guys. You have to realize that I've never seen the markets on this thin of a nice knife's edge, or a razor's edge, if you will. The volatility is insane, and tweets are moving markets like crazy. So what sparked this rally? So again, rumors hit the tape that there was a potential 90-day tariff delay, which CNBC quickly ran with. That ended up actually being fake because the White House later called it fake news.
You are fake news.
But markets didn't care. The S&P 500 closed the day 230 points off the lows, and then came the real kicker. And this was the kicker that started everything. He said, therefore, if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, that's April 8th, that was yesterday, I'm recording this April 9th in the morning, the United States will impose additional tariffs on China of 50%. So let's see what happens. Let's see how that's going for everybody. So China responded fast, saying that they will fight until the end. So later that night, the White House actually confirmed the full 104% tariff that is now in effect, and enforcement begins at midnight last night. So at the time of this recording, at basically 8 in the morning on the 9th, this is actually in effect right now. Check out this clip right here.
Making deals, and people are paying tariffs. Countries are paying tariffs. Right now, China's paying a 104% tariff. Think of it, 104%. Now, it sounds ridiculous, but they charged us for many items 100%, 125%. Many countries have. They've ripped us off left and right. But now it's our turn to do the ripping.
And then it got even worse. The White House doubles down and said Apple can fully manufacture iPhones in the United States. So let's take a look at Apple's chart right here year to date. They're down 30% year to date, and just in the past 5 days, they're down 22%. So if you want to manufacture iPhones in the United States, let me be very clear. I've actually done the research on this. Conservative estimates say that triples the cost of an iPhone, okay? That would be like a $3,500 iPhone. So that's not just anti-China. That's anti-multinational growth, and you can see that in Apple's stock right now. So what happened? Retail rushed in at the top. Mom and pop is buying, okay? Trading volume hit 29 billion shares on Monday. This was a new record. The herd is moving purely on headlines. Sentiment is polarizing right now. That's what I'm talking about, you guys. We are living in such a fast news cycle, it's unbelievable. So now fear is actually back at 2020 levels. I'll pull up a chart here, but the real story is the 10-year note. I'm going to get into bonds in this video. So I've been saying this all year. This is a trader's market. I buy and invest for the long term. Wake me up in 20 years. But if you've been trading this volatility, you are making money hand over fist. But here's the meat of the video. So the bond market is acting bizarre. So 10-year yields, they just pushed above 4.5% as stocks dropped 6% in 5 hours. This is not normal behavior. This is macro dislocation. So let's break this down, why this even matters, okay? So Treasury securities are basically IOUs to the U.S. government with maturities from a few weeks all the way up to 30 years. So they're considered one of the safest investments on the planet because they're backed by Uncle Sam, okay? I have a bunch of money in SGov. It's a 0 to 3 month Treasury ETF. So I have my own money where my mouth is. But here's the key, you guys. Bond prices and yields, they move in opposite directions. So when bond prices go down, yields go up, as you can see on my screen right here, and vice versa. So the 10-year yield is especially important because it's a benchmark for things like mortgage rates, and it's a major signal of investor sentiment. So if yields are rising, that means investors are selling bonds, chasing riskier assets like stocks. They want more reward, more risk, more reward, right? Remember, as investors, we're just compensated for the amount of risk that we take on. If I put money in a savings account, I can't be expected to be compensated as much as someone who's investing in a brand new startup, right? There's much more potential and more risk with the startup. So if yields are falling, I'll show you this, that's a flight to safety. So yields are rising like crazy. Look at this 6-month chart, how sharply they've increased. So this means that fear is in the air. This is exactly why we're watching yields so closely in this market. So let's take a look at this post from Jim Bianco. He says, something has broken tonight in the bond market. We are seeing a disorderly liquidation. If I had to guess, the basis trade is in full unwind since Friday closed to now. The 30-year yield is up 56 basis points in 3 trading days. The last time this yield rose this much in 3 days was January 7th, 1982, when the yield was 14%. This kind of historic move is caused by a forced liquidation, not human managers making decisions about the outlooks. So this is basically what a lot of people are saying. They're saying that China is just dumping American treasuries. Right now, I think Japan has about $1 trillion in U.S. treasuries, and China is right around $700-800 billion last time I checked. So this is China saying, hey, screw you to Uncle Sam and saying, I'm getting rid of this. So that's why a lot of people are bullish on Bitcoin, oil, land, gold, guns, bullets, things like that. This is not supposed to be like some panic-inducing sentiment or comment, but the numbers don't lie. We can see it everywhere happening right now. So this is important, you guys. So I want to talk about the VIX because this is super, super important to give you perspective. So this doesn't just come across as like the sky is falling, right? So let's take a look at the S&P 500 when VIX is above 45 for 3 days in a row. So you can see here on the left-hand side, these are the dates when the VIX closes above 45 for 3 straight days. We had October 21st, 1987, December 14th, 1987. Oh, I was born December 10th, 1987. Nice. Look at this. Green year, buddy. Look at that. I brought peace and tranquility to the world. Sorry. So October 6th, 2008, 2009, and you can see here. But here's what happens days later. 1 day later is negative 3.28%. 2 days later, minus 2.45. 3 days later, you can see all the numbers here. Basically, weeks later, we're still negative, okay? But as you can see, as time goes on, percent positive becomes higher. We're positive almost half the time at 43%. So what is this trying to say? Well, let's follow it up with this chart. You can see months later on a much larger time frame, look at the average return 1 year later, 29%. Percent positive, 86 out of 100 times, you guys. Sorry, I'm trying to channel my Latin DJ with the air horn. Hold on, I got a bunch of these. Hold on. The air. Oh, here we go.
There is no second best.
S&P 500?
There is no second best.
There is no second best, okay? Bitcoin?
There is no second best.
There is no second best. So what I'm trying to say here is have a long-term outlook, okay? That's why I buy and hold. That's why I dollar cost average, and this is why I smash bought the dips. Do I think there's still going to be more pain? Absolutely. Do I think anything has changed with my thesis that we're still the greatest country in the world and we control the capital markets and we export inflation everywhere through the dollar? So let's take a look at this uncomfortable truth by Ray Dalio, and then I'll continue with a couple more things about some positive sentiment here.
I mean, I agree with the problems,
okay, about the fact that we don't manufacture and that there is a problem with that. But there's a structural problem of whether we can manufacture. We have a population that basically 3 million people, 1% of the population, is incredibly brilliant. I mean, they go to the best schools, they come out, they make the unicorns, inventiveness, half of which, by the way, are foreigners. And at the same time, they are making the unicorns. At the same time, what we have is 10% of the population around them that's doing very well. The 60% of the population has below a 6th grade reading level. And it's tough to be productive.
So this chart right here is showing you the S&P 500 stocks above their 200-day moving average. Historically, a buy signal comes when it climbs back up above 15%. Okay, so that's your trigger to potentially get back in. So you can see all these green marks. These happen multiple times throughout history. Is now a good time to buy. That's pretty much the line that we're at right now. So this is also why I've been smash buying, you guys. I have a very long-term outlook on all of this. And then finally, let's take a look at this chart right here to give us some perspective. The S&P 500 is currently in its 11th worst uninterrupted decline since 1940. Over the past 4 trading sessions, the index has dropped 12.1%. Here are the other instances of large continuous drawdowns and what happened next. So you can see here the start price is at 56.71, end price is at 4,900. This was a 12.1% drawdown, which is lasting about 4 days. The next day rebound, we don't know yet because of all the stuff that's going on right now. But you can see here the next day rebound on a lot of these has been 5, 6, 7, 8, 9, 10, 11%. Yes, there's been some that are 1%, 0.4%, but for the most part, the rebounds are pretty large. So buy the dips, stay invested. It's very simple, you guys. So bottom line, this was a textbook bull trap. And if you're not watching the bond market, the Fed, and global sentiment, you're going to get blindsided again, okay? That's why we have Whiteboard Finance University. If you don't want to sign up for that, these videos take a lot of time and effort to make. Buy me a coffee. The link is down below. Buy the home affordability spreadsheet. Do something, okay? Don't be cheap. Don't be like a typical American. When the bill comes out, you get T-Rex arms, and you're all like, oh, we'll split it. Just Venmo me 17.4% of the tip of the bill, and then we'll do some Pythagorean theorem to figure out. Just pay the bill, okay? Just grab the check, pay the bill, slap down your credit card. Stop being a cheap, okay? So if you want more real-time breakdowns like this on the greatest finance channel on YouTube.
There is no second best.
There is no second best.
It's all going to zero against Bitcoin.
Please, gently smash. And I'm just like crossing my wires. Gently smash, don't gently tap. Don't smash, don't be too gentle. Be somewhere in the middle. Just click the subscribe button, okay? Click the bell for notifications. Share the video with 13,000 friends. Bloop, bloop, bloop. This one guy goes, last video, he goes, you're an AI. I go, yeah, dude, I'm an AI. Bro, do you see the bags under my eyes? I got 2 kids. I haven't slept in 3.5 years, and I'm an AI. Kiss my ass, dude, okay? These videos take a lot of time and effort to make. I'm losing my mind real time. Oh my God. Again, here's where the room temperature IQ comments come in, okay? Guys, I like to joke around. My portfolio is getting decimated right now. It's either this, a little humor, or, okay, Macallan 18, okay? So just relax, guys. We're just having fun. But all joking aside, I did buy like 45 grand worth of stuff for the past few days. I'm in it for the long haul, guys, okay? It's the greatest country on earth, or at least that's what I'm programmed to believe. All right, thank you, guys. Have a prosperous day. Peace.